All right, so a little slow getting on to the rig, so just bear with me as we take a look. I've been bringing in FX Street in the mornings before we get to the calendar on Thinkorswim. It's been a little bit of a go-to, mainly because it has a perspective on the dollar right off the top of the screen, and then it also has your events for the day. And I talk about all the time when it comes to the dollar, you really need some perspective on why the dollar is making a move, right? Because without that perspective, if you see a dollar going up or the dollar going down, and you're trying to figure out, well, what's that going to mean for the marketplace? Just the move alone doesn't tell us anything. We have to know, why is it being sold off? Why is it being bid up? And so this little excerpt right here is a quick visual on their perspective of why the dollar is doing whatever, right? Then when you scroll down, then you've got the economic events on the day. As you can see, we do have some econ on the agenda with a high impact expectation. If we come over to Bloomberg, they have, you know, 5 things you need to know is the free email that you can get. 5 things you need to know to start your day. Even if you weren't signed in, and I am because I have a subscription to Bloomberg. If you don't have a subscription to Bloomberg, really think about getting one. I think that this monthly subscription cost me like $6 a month. Really? I mean, $6? Yeah, I think I can handle that. But even without having a subscription, you can still sign up for 5 things you need to know to start your day, and they'll just send it to you in an email, right? You don't even have to go get it, they would just send it to you. So it is the CPI data today. They are talking more about delays in the Winter Olympics. There's more going on with crude, and don't forget on Wednesdays we have the crude numbers, right? 10:30. We're going to be looking at that in a minute. And then they look at the overseas, what happened in the overnight hours in Asia, what's London doing today and right now. And I was catching a little bit of their little hoorah going on over there. One of their political leaders really stuck his foot in the cheese, and now he's, backpedaling and apologizing, and they're just raking him over the coals. I don't really see how that's going to impact their market all that much, but so nothing really is standing out here other than we're all on hold for the CPI, and that crude is still a really big deal. So I want to take that and bring it over to the marketplace. Thinkorswim has Market Watch. Just take it on the calendar. If your calendar looks like this and it's really cluttered and just really full of junk, the fastest way to get it cleaned up is to uncheck everything and then just turn on the Econo Day event. I like to grab the description and bring it across so that it's right next to the time frame. That way I can just see what's going on. 8:30, 10, 1, 2. I skipped the EIA petroleum status report because it's not expected to impact the market. It is expected that it could impact oil and maybe steel. Steel and oil has a greater inherent connection throughout history than you would like to believe. I've worked in both industries. I worked in the oil field for 20 years and the steel industry for 7 or 8 years. It felt like a freaking decade to me, but kind of close enough. They are tied together, right? USO is the market we generally watch as we come up to 10:30. It makes for a nice day trade at the very least, right? It's like an expectation that one market could have volatility come in at 10:30 and you could be in and out by 11 with some really nice returns. Plus, it's not overly expensive, so you can trade it with stocks or options or both. And I am a big fan of both, right? I like trading a combination of stocks and options. So that's what's on the books as shown here. But let me show you what's missing. So I'm just going to randomly pick a Discord. I'm already in the Bullish Bears Discord. I want to scroll down to bot commands. So here in the bot commands, I want to give it a command. I'm asking for the calendar. So exclamation point, calendar. That's not the calendar we're looking for. So just give it a moment. And the fam bot shows up. Look at all these things that are on the agenda for today. And I know if it's in the stream, it's going to be very hard to see, right? Like you're probably squinting at it and saying, Sig, I can't read that, dude. That's way too small. I get it. We've got FOMC member Brainerd speaking today. That's at 10 o'clock. We've got another one speaking at 1 o'clock, right? And that's, I'm not even going to butcher her name or his name. So there are FOMC members that are going to be talking. Now, remember, there's a difference in their membership, right? You have voting and non-voting members of the Fed. They can't make policy. They can't propose. Should not. I don't think can't is the right word. They should not be proposing new policy, right? The only thing it can do is like give some opinions and some perspectives. Still, don't believe that they can't move the market. And I remember a non-voting member of the Fed at a luncheon made a comment about the marketplace back in 2019 and just rocked the market drastically, kicked me out of a position. And it was just like, what the heck happened? And it was because one of these FOMC members were chipping their teeth with a reporter and made a flippant statement that the reporter took and went and reported. And of course, then they had to backpedal and, oh, it's not what I meant, and blah. Yeah, well, it didn't stop that I had already triggered, right? So recognize that when it comes to economic events, uh, check multiple sources. We went to 3 this morning, and we found that they each had different things on the list. Anybody else having a problem not hearing me? I guess if that'd be kind of funny because I'm talking, and if none of you can hear me, then you wouldn't be able to answer me. Let's try large caps. Thank you. Uh-huh. I would say when I'm done with the morning briefing, you can ask questions because then it won't be a part of the recording and it won't be there for locked in with prosperity for everybody forever and ever. Amen. Right. So let me finish the briefing and kill the recording, and then we can do that. Hmm. All right. Sorry, guys. I just got, detoured when I seen that somebody couldn't hear. It's always a concern, right? Spend 20 minutes talking and find out you're talking to yourself. It's fun. So we've done the economic for the day. We've got to look at Bloomberg on the day. It's a natural reoccurring thing that we want to do every single morning. You do the same thing again and again and again. Looking for a way to set up your trading day. Get a feel for the market a little bit. What happened while you were sleeping? Anything important, anything that you need to know that's coming up on the day. The clock is one of the most powerful tools at your disposal. And since it seems so simple, nobody looks at the clock. I can show you numerous examples where if you would have been watching the clock, You would have avoided a loss or made a heck of a lot of money. So we're kind of sitting sideways. We didn't really have a massive move through the kill zone. That'd be the 2 to 4 time frame. For a move to the upside, we're only up a dime. We're barely up at all, basically flat. We would need to reclaim the Globex high. Let's kind of come out here for a moment and get some perspective. You should always be willing to come out to the daily time frame. I don't care what kind of trader you are, day trader, swing trader, take a look at the higher time frame because you just may find something. Maybe you don't, but I promise if you never look, you'll never see it. What we can see is we're getting back above the 20 this morning. We still have the 10 overhead. We're back above the 50. Those are critical levels. Now you can plot those critical levels depending on what broker you're on. Just type the word daily, get a daily SMA. Now you can choose to set it on the weekly, the hourly, whatever you want. We just want the daily, right? So we got the 10 period daily moving average. Well, we know that the 20 is there. We just looked at it. So we want to add the 20. And we don't need the 50 anymore because it's underneath us, right? So now when we come back in, guess I should have made that a little bigger. You can see where that simple moving average is from the daily time frame. We're tangled up in it right now. And what's over our head is the 10. I guarantee you when price gets to that 10, there's going to be a reaction. I don't know if it's going to break through. I don't know if it's going to reject. And you don't know either. But what we do know is there is a very, very high expectation that price will react when it gets there. You would kind of want to know that it's there, right? You kind of want to know it's over your head. You don't want to go long right before you hit that thing. It's also very likely that the first time we touch it, it's going to have a soft rejection. At least it's going to have a rejection of some kind. The question is, will it be soft or not? Back here, you can see we hit it, had a hard rejection, hit it again and again and again, right? We just kept hitting it and couldn't get through it. Every time there was a reaction, there was a tradable opportunity, especially first touch. When it comes to pivot point trading, first touch is a quick way to get day done, right? It's the expectation that when price gets to some level where there is liquidity, the very first thing it's going to do is jerk back away from that liquidity. Well, if you know price is going to do something, you can trade it. The ADR on the ES right now, 1.3%, we're basically flat. A good clean bullish move would be a 1% move, right? That's just like a regular default thing. You just always can throw 1% on a market and say, yeah, good clean bullish day is a 1% move. 47.58 would put us right around the bottom of this big structure back here. That makes sense. We would be able to move through this area relatively quickly because there's no volume structure there. Volume structure is very shallow, right? Volume by time, volume by price. And we can see that that shallow area, we are likely to move through it very quickly. So if we do get an upside break through the highest point of Globex, it is likely that we will transverse through this zone fast. There's also not a lot of resistance there, so it should be relatively clean looking price action. If the market does not like what comes out today, things start to turn negative, we'll look to resolve this situation to the downside. I would really focus on the pivot points of yesterday. We would first get through the Globex low, deal with that 50 on the 30 is not really one of the higher time frame ones we want to deal with. Yesterday's Globex high, the initial balance of yesterday, the open of yesterday and the low of yesterday, that is a significant move to the downside, right? If it's that bad, it won't be subtle. It won't be sneaky. It will be in your face extreme. We were talking about the change in market sentiment yesterday. How many of you were caught sideways or unaware as the market flipped over and ran like a mad demon to the upside? And how long did it take you before you finally realized that we weren't bearish anymore? We were showing pictures of the visualize tab. Rather than using the heat map, we were looking at the index watch. It's something that I look at constantly. So we're looking at pictures of this, the advancing versus the declining issues, the capital and the volume. And I posted it in the futures because that's where the conversation was happening. And you can see the numbers as we went into the close yesterday. 77% of the S&P was advancing, but look at the money flow, right? Start counting your commas, 100,000, million, billion. And then the NASDAQ, 88% of the NASDAQ. So that was at the close. But what about earlier in the day? Well, this was 9:45 in the morning. 77% was declining, 76% was declining. The money flow was really negative, and this was 11 a.m. Look at the declining issues. It's still at 61%. And then look at the money flow. It was already turning bullish, and it happened very fast. Same thing with the NASDAQ. We're 50-50. We had half advancing, half declining, but look at that money flow. When it flipped yesterday, it flipped a switch. Everything started lighting up, right? It wasn't sneaky. It wasn't subtle. It was right there. You could see it if you were looking. Take a look at it. It's free. You don't have to pay for it. And so it'll be the same thing today. If we start making moves through this level and bump our head on the branches all the way down, will see it in the tape, in the AD, in the money flow. For the NASDAQ, we're also basically flat. We've got an ADR of 2%. We want to ask a simple question. Are those moving averages in play? Can we get that far? Less than a 1% would get us to the 10-period moving average on the daily chart. If we get there, there will be a first touch reaction. That's a trade opportunity. Then there's the 20-period moving average, and that's 1.5% away. We got a 2% ADR. We can make that distance. Just keep in mind that we've already burned 12 hours of the day, right? So in the time we have left, could the NASDAQ move 2 points or 2%? Oh, it most definitely could move 2%, but it won't be subtle, right? It's not going to sneak up on you. It will be lit. So this morning, what we're going to be looking for is a break back above the Globex high and then a move in that general direction. I wouldn't expect more than a 2% move, although we do have that same shallow area. And we're very likely to move through that shallow area very quickly. And when I'm talking about the shallow area, I mean looking at a volume profile and a TPO profile and looking at this shallow area here. Price moves through those shallow areas or is expected to move through those shallow areas very easily or very quickly. Should things turn negative, although, I mean, if you look at that massive inverted head and shoulders right there, like textbook perfect, right? If anybody's seen a bunch of generic medical charts while they're waiting in the waiting room, am I the only one that looks at it and sees that? A downside move, just like in the ES, would be putting us back to the lower side of the structure. The 200 on a 30 has significance. The 50 does too, but I mean, like we start going down that rabbit hole, and then it's, well, every single time frame has a moving average. Every one of those can be applied to 50. Every 50 would be impactful, and that just becomes madness. The bottom of the range is not out of play. We can easily make that move, right? So 1.89%. Either one of those moves would be directly connected to a move in the dollar or a move in the bonds. You can see how the bonds recovered in the later part of the afternoon, and we really haven't done anything since then. These moves may not seem like much, but it is impactful. The bigger picture is the dollar, however. It's the one that people are really focusing on. We broke a major critical level, and we have a price pattern setting up that I really love to play. It's a bear pennant, and I'm looking for failure of the pennant, right? So I'm looking for a bullish move out of this little triangle shape right here. Typically, it's a 4% banger, right? Imagine a 4% move in the dollar in a day. That would be pretty extreme, right? My goodness. I don't think we're going to see a 4% move in that thing. But generally speaking, that's the, this is the bonds. So yeah, we won't see hopefully we won't see a 4% move in the bonds, not the dollar. But dollar would get back to this pattern right here. We traded it in Walmart 3 different times this year, and every one of those, well, we traded one 4%. The other ones, I think, went 4%, but we got like 3 out of it, 3% moves, right? We're looking for failure of the pennant. So we're expected that this compression and then breakout. One thing we really want to see in that is that it rallies up in the pre-market and gives us an R2G. We've got IX10 R2G set up with a compression in a bear flag pennant. This play is phenomenal. You can do it in stocks, options, futures, trade it anywhere you find it. Notice I'm on the daily chart. That's where it exists. That's where you find it. So on the bonds, we've got that low. We really want to make sure we stay above 152, call it 153 critical levels. We don't want to get below those levels, right? And we also don't want to see these extreme moves. When we see those extreme moves, really want to readjust your position sizing, prepare for volatility. It's going to get nasty out there. Same thing with the dollar, the bigger picture. Where is the dollar? Where is it going? Why has it been moving in that general direction? What's its expectation going forward? And has there been any extreme moves? Right? That's one of the key critical components. Is it making exaggerated moves? So we're at a critical level here. It's what we call the make or break level. Keep your eye on those two markets. The dollar opens at 8 a.m. The bonds open at 8:20. So they're great when it comes to early warning indicators. Right now, we've got a flag pattern showing up. And for anybody who's seen my videos on this, we're looking for a failed flag, right? Because it's already demonstrating that it doesn't want to continue. If this was a trend, a natural trend that was making a new move to the downside, continuing its flag pattern, then it shouldn't have been basing for so long, right? Now we know that a market can base and base and base and base for hours and then continue the move, right? See it over here in the bonds. So we know it can happen. Generally speaking, though, we're looking for a reversal off of it that looks a lot like the Dow over here. Builds a base, reciprocates, runs it back up to a previous level. So that's the situation we're in right now with the dollar. Look for it to give you the guidance, right? Don't just assume that you know it's going to break up or down. Let it break and then trade the move. Or if you don't want to trade the dollar, let this be your inspiration on the trade that you do want. Either way, when these two make extreme moves, it will affect the rest of the market. Keep your eye on the VIX to confirm the dollar. If they're moving in tandem, then you have a better understanding of what is going on in the dollar. There are times where the dollar is a risk asset, just like the VIX, used by markets around the world, so a global risk asset. And then there are other times where it's completely disconnected from the VIX. So we want to know if they are syncing up or not. It's a quick visual. Just look at both of them. If their patterns and charts look the same, they're syncing up. So that covers the futures. I did see a question about expected move. There's always the tiptoe that we have to do, right? If a company gets news, right? Say Harley Davidson gets news, then Harley Davidson is going to move based on its own situation. But without news, it's going to move a lot like its sector, and its sector is going to move a lot like the index, and the index is going to be moving based on what's going on in the bonds and the dollar, right? So at that point, all the dominoes are connecting to each other. One thing about identifying in the pre-market that we are in one of those days, what we call one of our trend days, is that in a bona fide trend day like yesterday, 8 out of 10 stocks were on the run, matching the S&P. So it was like throwing darts at a wall. You know, the target was really broad. You could basically just buy calls across the board in 8 out of 10 stocks. You were going to be a winner. Really nice to know that, right? That you don't have to sit there and run scanners and crunch the numbers and hunt for the thing when you can just go in and buy literally $7 calls across the board in the hottest sector that's moving and get 200 and 300% returns. Gotta love it. So here we are looking at the sectors. Natural gas and crypto are leading the way. Emerging markets, which is a global risk asset, again, a lot like the dollar. To me, when this thing goes bullish, then we're looking at a global bullish bias. And if it's flat or negative, then we're looking at a risk off feel around the globe, right? So it's kind of an early warning heads up. I never do TA on this thing, right? I never come out and, like, oh, look, a micro cup and handle. Oh, an inverse head and shoulders too. Yeah, super bullish. No, I don't care. I'm just looking at the change percent. Is it bid up today or not? Right? That's the get. That's EEM. Energy comes in behind that, and then cloud services. It makes sense on cloud services, mostly because of linear regression and mean reversion. We moved very far, and a lot of the names in here are really good, strong tech companies. But with the whole inflation and value versus growth, it got beat down, right? And it's been getting beat down since October-ish, right? It kind of flattened out in September, August, September, October. We started breaking new lows and really started making these moves to the downside. Well, we dipped below a real critical level. And like IBD talks about all the time in their pattern analysis and uh, pattern research, is that double bottoms and triple bottoms are supposed to go lower than the previous low. They're designed that way. They want it to be that way. That was hard for me to come to terms with. When I was a newer trader, I thought when price came down to that bottom, it was supposed to bounce there. And that if it failed to bounce, that the trade was off, that like the whole situation was just like you just shrug and say, oh, well, maybe next time. I guess it's no good. What IBD says is look at it from the other point of view. Why would it go lower? And what's that designed to do? Well, it shakes out the weak hands, right? So anybody who's trying to take the long off the low, they buy, they use a tight stop, putting their stop underneath the lowest low. It goes down there, they get scared and wipe it out, right? So the longs are getting stopped out. When we break that low, the shorts start piling in. They think, oh, yeah, this thing's going lower. I knew it was going to fail. And so people start shorting it. When it rallies back up, the shorts get squeezed and they have to buy back. Well, they're buying in the rally while the institutions are buying in the rally. And this thing really, really rallies. Short squeeze. So when you're looking at a double bottom or a triple bottom or a critical level like a pivot point, think about the fact that it's actually not supposed to stop at the pivot point. You don't even want it to stop at the pivot point because then that actually indicates that it's the retail trader who's running things and that the institutions are actually standing aside and letting you do it. And if they're letting the retailers drive, then you got to kind of ask why. What's their end game? So don't trade pivot points right on the line. Expect price to aggregate beyond it. It's literally what they do, right? It's why the megaphone pattern is so valuable. So we're looking for a reciprocation at the very least, right? A pullback. And this fits the dead cat bounce that I named today's stream on. Is this just a pullback before we continue the move lower? Or is this the start of a rally back up to these previous levels? If we look back here, that was the pullback before we continued lower, right? Trend 101. Well, now it's the same question. Is this just a pullback? When it comes to these breakout levels, keep in mind that volume is very important. That was a weekly chart that we're looking at over here, right? This is weekly. This is daily. Look at the amount of volume in that breakout to the downside. Increased volume. But that's not massive volume. That's not even wow volume. One thing that really stood out to me was when I was going through IBD's material that they said the volume really, really needs to be there. And volume's always been a tricky thing, right? Like, how much volume does it need to be? What number do I put on it? They say it should be volume that makes you sit back in shock and awe, like, ah, damn, that's some volume. If it isn't that, then it isn't extreme volume, right? So you should be able to just look left at previous volume and ask, well, is that volume shock and awe? Is it greater than this volume back here? Not really, no. Okay, well, then that's not like, oh, damn, volume. That ain't it. That would be, right? That volume kind of stands out. You can see the EV market is lit up this morning. We look at the EV separately because there really isn't just an S&P 500 EV sector that we can look at, right? On the negative side of things, biotechnology, which is getting a little bit of a bear pennant. You can see that move from yesterday, that extreme. I do believe we got quite a bit of red to greens showing up. So you're definitely going to want to look for an IX10 red to green, maybe bear pennant breakouts. We'd be looking for the failure of the bearish pennant. A lot of flat sectors this morning, things that haven't moved at all. And from my perspective, if it hasn't moved at least 0.5%, then I don't even consider it up on the day or down on the day. Finance and technology are side by side. We need one of these two to get into the game. We cannot have a rip rally without at least one of those two. Energy and finance has been tightly connected, so keep your eye on those as well. And when you bring in, the whole idea of what's going on in crude and the fact that we have the petroleum report today, energy may just be the play anyways. You see the crypto list is looking really good. A lot of names are up more than 1%. a lot of those crypto names are cheaper names too, right? So you can do a combination of stocks and options. Chip sector is looking really good. And there is an ETF that we use for the marijuana sector. It's MJ, but I don't I don't think it does a good enough job differentiating between what kind of marijuana company it is, right? And the distinctions matter. So we just built a watch list with the various ones that have the market cap and weight that are actually worth looking at. And then looking at those on the day, kind of asking, what's up and what's down, and is there a particular part of the pot stock industry that we may want to focus on today? When we can't use the sectors, that's where we want to bring in the watch list and use our scanners. It's on those days where I say we really have to up our game and be stock pickers instead of leaning on the sectors. It's a simple thing to go in and scan on Thinkorswim asking how many companies with weekly options are up in the pre-market, or just a watch list of companies with weekly options. There's 600 if you count ETFs and regular companies. Out of those 600, start to narrow down the ones that are beyond your price range, that maybe aren't liquid enough. Even though they have weeklies, they're not guaranteed to be liquid. Maybe narrow down the list from ones that have daily chart patterns that you would like to trade, the IX10, inside day breakout, R2G, right? And then kind of narrow down the list, because your goal is to funnel from a large list of stocks down to 2 or 3 picks for the bell, right? So that's what I got for you this morning, everybody. Be careful, be safe. I'm going to kill the recording, but stick around because there was a question, and we'll deal with that. Just let me kill the recording.